Anybody who's keeping an eye on taxation in the UK at the moment, or over the last 2 or 3 years, can't have helped but notice 3 letters, MTD. Making tax digital keeps cropping up. It's on the radar, but nobody's really sure exactly what it means. What does it mean to my business? Or one of my favourite things, can I just ignore it altogether? The answer very definitely is no, you can't ignore it altogether. I've been joined in the studio by Owen Kyffin and Jonathan Walton, who are directors at Whitley Stimpson. And Owen, we'll start with you. I mean, this is a tax issue, but actually what we thought was going to happen a couple of years ago, it's nowhere near as dramatic as that for now.
No, exactly. We know something is going to happen and we know something of what is going to happen, but it's all moved a little bit further into the future at this moment in time.
Okay, and whilst at one point it was all about income tax and all about capital gains tax, and then VAT was sort of mentioned a little bit later on, now VAT is going to be the first thing we look at.
VAT is definitely the first thing over the horizon from April of 2019. We know that's going to happen. We know with the other taxes, all of the legislation's been passed so that they could be brought in without any further action on the government's part, but we don't yet know when that will be. And at the moment, certainly for income tax and corporation tax, we know it's not going to be earlier than 2020, and it could in fact be longer away than that.
Okay, and Jonathan, as far as the clients are concerned then, we need to make sure that they're ready for VAT is job number one. And they need to report in a different way, I guess.
They do need to report in a different way. One of the concerns I have is that the government were talking about the lowering of the VAT threshold. The Office of Tax Simplification did a report to the government in November 2017 and noted that the UK has the highest threshold in the EU and also one of the highest thresholds in the whole of the OECD. And one of the recommendations was perhaps lowering the threshold to £43,000, and it's currently 85. That would bring about 600 to 800,000 additional businesses into the frame of VAT and raise obviously more money for the Exchequer. The issue is going to be, for many businesses, they're not used to keeping books and records. That will be required under MTD, which some lecturers describe as making tax disastrous or making tax difficult. But making tax digital means digital records.
Okay, and so that's the first point to sort of look at. So in the dim and distant past, we all used to keep a book, literally a book. We would add numbers up in the various columns, and we would take those numbers and write them onto a VAT return, which we put in the post, and that was sent off to the revenue. Most people haven't done that for quite a while. Some still do, but most haven't done that for quite a while. Nowadays, it tends to be that however we've kept our data, we then will electronically file the VAT return at the end of it to the revenue. And obviously that's something that Whitley Stimpson does for various clients. But actually, it's how we keep the data up to that point that is going to change.
Yeah, I think one of the biggest problems is that obviously clients have been able to go in and put journals through or amend details, amend data. That there just isn't going to be that facility moving forward. And what bothers me is that a lot of clients don't really understand, bookkeeping. They might treat things like HP assets incorrectly. They might incorrectly claim VAT on something and then phone us later to ask us. I am concerned that clients do not have the actual knowledge to be able to comply with the requirements of making tax digital.
Okay, and there are some people out there who've said, Owen, that this is going to, rather than being once a year when a tax advisor might look at the figures, it's going to be every quarter at the very least in the future, because as Jonathan says, we're going to have to make sure that everything has been dealt with correctly.
Absolutely, and certainly in terms of making VAT returns correct from when making tax digital first comes in next year, that will be the case. But taking the longer term view, when you're looking at income tax and corporation tax, obviously if people are preparing their own quarterly filings, unless they involve their accountant, those quarterly filings in total at the year end might look very different to the final set of accounts we produce.
Okay. And because the point there, moving on to income tax briefly, is that MTD for income tax, we're fairly confident as we sit here will happen. It's just a matter of when.
Yeah.
And the point there is that what is currently a tax return filled in 9 months after the end of a year, in the future it's going to be that pretty much every quarter, I say we will prepare a tax return for that person. In fact, the long-term plan of the government is the person will prepare the figures and it will just automatically happen. And that changes the need for them to get it right massively.
Well, it certainly does, because I'm again concerned that a taxpayer could do a quarter, a second quarter, third quarter, fourth quarter. If they're taking tax planning just at the fourth quarter period, which is not unusual to do tax planning 6 to 8 weeks before the year end, it could cause quite distortions in figures. And I'm slightly concerned what the revenue will do with those figures, because I have a fear that they'll just look at the amounts that have been sent in for sales and purchases, etc. But if you've made a big pension contribution or something, or there's some dilapidations that needs to be paid for, etc., or a bonus that's been paid out, it may not give the revenue enough detail to actually understand the figures properly. And I am slightly scared that it could cause more investigations. So I believe really that forward planning with an accountant quarterly is actually the way to go, because I think that will create less distortion in what's reported.
It's almost sort of preparing your figures, obviously to be correct. We should always point out we just want everything to be right. We're not trying to hide anything. But at the same time as that, we're trying to make sure they're sort of proofed against any questions that are then going to be asked. So
Correct.
if an ice cream seller's first quarter is June, July, August, and the revenue turn up and say, well, you should be making a fortune by the end of this year, you're in place to say, well, actually, winter's normally not great for us, etc., etc. It's that sort of analysis that you would need to do.
Yeah, there's lots of companies that have trends and recognise their revenue at different phases. Software houses, for example, we have clients that do all of their turnover really in 3 months with a software house. But as I say, one of the biggest issues for clients is to take the data, to make sure that they're comfortable with what's been presented, what's been sent to HMRC, and that's really where we can help.
And I think the point is, whilst that is fantastic that you can help, some will be saying, well, can I not just keep all my receipts and then give them to you and you can do all of that? It is going to require that ongoing process, which means you do need the client on board with you in this journey. They need to be getting their stuff right.
Yeah, I mean, one of the things the software houses have quickly recognised is obviously the need for MTD, and so consequently, the most proprietary software like QuickBooks and Sage and Xero, their products will be ready to deal with Making Tax Digital. The Federation of Small Business thought that could cost any taxpayer an upwards of £2,500 in compliance costs, because obviously there's a cost of purchasing software. But there are some advantages as well, because most of this software is online. We can view it at the same time a client can view it anywhere in the world, really. And we can look at how the business is performing. So whilst Making Tax Digital does have drawbacks, there are some benefits too. Most cloud-based software also has apps involved, so you can look at it on an Android phone or on an iPhone, and it actually means that you can have up-to-date, relevant, reliable information as a taxpayer too.
So a good example of that, I was at a physio the other day, and when it came to payment, her phone came out and I was able to pay straight onto her phone using my card. And it was amazing that you immediately then have the information on the phone, you have the record of the sale, you have the cash coming in, no need for bits of paper at all. So there are some positives to this as well as the slightly scary part of it.
Yes, there are. And in fact, if you go in a taxi or go on the underground, you can actually get your receipt scanned straight into your phone and be entered as an expense. So it works both ways. You can also track your bank details on the telephone. And you can also issue invoices from some of these software packages, well, all of these software packages, and that's an advantage as well.
Okay. So as far as Whitley Stimpson are concerned, in terms of taxation, it's not like normal tax planning in that we need to advise people to take a particular course of action. It is, I guess, make sure that your records are in place.
And I think it's a preparedness and a mindset point as well. And another possible advantage is avoiding the last minute rush that we have with 31st of January filings now, because if clients are required to update their figures quarterly, it should put them a bit more ahead of the game when it comes to preparing the final calculation of their tax liability for the year.
And whilst we focused earlier on the idea of somebody, we thought they were going to have a good year, but actually it's an average year, again, from a tax planning perspective, the access that through the cloud that you would have as a tax professional to somebody's books and records going through the year, you could say, actually, you're having a fantastic year. we need to think about the bonus now. We need to think about getting this money out in a more sensible way.
Absolutely, yes.
As far as Whitley Stimpson are concerned, presumably there is the speaking to clients to be done in terms of, I was going to say letters, obviously, with Making Tax Digital. We should probably email people and have this conversation. But again, presumably you're going to sit down with them and explain this to them very clearly.
We are already sitting down and explaining when we see new clients. We're talking about using software. But in addition to that, we're going to hold some roadshows. We're doing a couple of seminars. We're doing one in Ainhoe in March. We're doing another one in High Wycombe, also in March. There'll be one also in Whitney, probably in April, May time. But because the landscape keeps changing for Making Tax Digital, and we're still not entirely certain when it's all going to come in, I suspect there'll be a lot more news on our website as we go through.
Okay, so in terms of a quick summary, in terms of dates, Owen, we're only interested in VAT for now.
Absolutely.
And that's 2019?
Yes.
Okay, so from April 2019 onwards, we need to be doing our VAT in this way. As you've already said, it could be more people in the very near future as that VAT registration threshold potentially changes. And then in terms of record keeping, for some clients, worth pointing out, for some clients, you're already there, you're already doing it, carry on as you are. But what is the one message you would offer to other people out there?
Come and talk to us, because we can also help to find the best package for you. I mean, there are a number available. I believe in cloud-based packages because I believe that it helps us give better added value advice. We do still have the odd one or two clients with paper bags, not just books and records, but paper bags. They're very few and far between now from when I first started in the profession. And clients actually want to know how they're getting on. So come and talk to us and we'll guide you through for the right software. Some of them are quite cheap, they'd start at £6 a month for very few transactions, but on average they can be between £15 and £25 per month. I know that's a cost, but actually using your money efficiently in a business, I think, has a much better value.
But also at £15 or £25 a month, to then be able to have somebody like you guys looking at those figures quicker, being able to respond to tax planning, potential problems being spotted in the business, that in itself could be worth a fortune all by itself.
Well, and if we look at clients' data as they progress the quarters and stop them having tax investigations, that's very, very valuable.
Okay, so do get in touch with the guys at Whitley Stimpson. They will be able to lead you through the future years of Making Tax Digital. At first, perhaps by visiting the roadshow or just getting on the phone, or as Jonathan said, looking at their website in more detail. As and when things change, have a look there, and in the news section we'll certainly find the information you need to find. But for today, Owen, Jonathan, thank you very much indeed.
Thank you very much.